Hi, this is an in-depth video on the gap up and gap down that occurs in the market and how do we interpret them, what are the four types of gaps that you need to understand, how do you mark the key levels on charts using these gap levels, and when we consider something as a gap filling and much more concepts on the gap up and gap downs, how they will form, what is the role of SGX, Nifty and the US markets in it. So everything will be covered in this particular video. Actually, this video is a portion that is taken from one of our recent batch, which we taken on the price action. And this is one of the 40 plus concepts that we covered in the mentorship. So let's get started with this. Here we will be discussing about some more advanced concepts, which includes the gap levels. How do we have to make use of the gaps? What are the different types of gaps that happens in the market? And also using these trend lines and then support and resistance, we need to understand how the price is behaving. So based upon that, we'll find out different patterns, which will show the strength of buyers and sellers. Then you'll be having an assignment wherein you can find out different stocks for different patterns that you can take it as assignment work. Then finally, we'll get to discuss in depth about breakout and breakdowns, and then how do you identify the fakeouts. And then finally, all the knowledge that we have discussed till here will be putting out together with an example chart. So this is the concept for today, and let's get started. The first concept is gap. Gap is nothing but the gap up or gap down that happens in the market. Let it be index or let it be stocks, etc. Sometimes you see that most of the times it happens. For example, if you take any stock or let's take Bank Nifty. For this, go to daily time frame. In daily time frame, so go to daily time frame, and then here you see there is a gap between two candles. For example, if you see here, from this candle to this candle, there is a gap, and that gap is not filled. That means on this particular day, market opened over here, but it could not fill the gap on that particular day. At the end of the day, if you see, it is still market ended over here only, which means market, even though it made a gap up opening, it could not fill the gap on the same day. So that particular point of time, it is an unfilled gap. From this place to this place, the entire gap is an unfilled gap. So this is the general gap up. If there is a price opening above and then not covering on the same day, if the gap is still there, that is called as a gap up. Like that, gap downs also will happen. From a level, if you see this one, this is where the market closed on one particular day. On the next day, market made some gap down opening, but that gap did not fill on the same day, which means the gap is still there, which is an unfilled gap down. So generally what happens is this gap will be of different types. Let's understand like what are those different types of gaps and why the gaps will occur in the first place. So gaps means generally like this as we just saw now, but the gaps can occur because of multiple things. Especially mainly because if you see the gap up or gap downs, that happens mainly because of post market hours, whatever happens in the sense like our markets will close at 3:30. But if you see, there is one reference index for our market, for our Nifty, which is basically SGX Nifty. So SGX Nifty have to check. Here you can go and then search for this name, which is SGX Nifty 50 Index Futures. If you see this, nothing but our Nifty's reference chart, but this SGX Nifty will be trading in the Singapore Stock Exchange, not in Indian Stock Exchange. So they will be trading our Nifty 50 future contracts. So even though our markets are closed around 3:30, the Singapore Stock Exchange will be open. So people who have access to that market will be keep taking the trades depending upon the information that is coming out even after the market hours. Now, if you see what happened today, our markets closed around 3:30. So that means this is the SGX Nifty chart. And during the market hours, mostly our Nifty chart and SGX Nifty chart, mostly it looked like similar thing only. That means our markets closed around 3. So 3:25 candle you need to see because it will start at 3:25, it will end at 3:30. That means market closed around this area. And the volume also will be higher during our market levels. So if you see from 9:15 to 3:30, the volume is higher. After that, volume might be slightly lower than compared to the day volume. That means during the live market, the volume can be more. After that, the volumes can be lesser. But again, here, if you see, there has been a huge jump that happened. And because of that, as of now, the market is almost 1% on upside. That means now what happens, even after our market getting closed, this SGX Nifty kept on continuing. And what happened till 7 o'clock, it was over here. And then this huge jump happened. Now, why this huge jump happened is because today around at what time? Around 7 o'clock, what is the monthly CPI index will be there. So that is nothing but US market inflation. US market inflation, what happens is every month, once in a month, they'll have one particular date. They'll announce what is the inflation that is there in the US. And that generally comes around 7 p.m. monthly once. And today is that particular date. For the month of November, they are releasing in 30th December around 7 p.m. And that is nothing but today. And here, this jump is because if you go and check the US market, which is Dow Jones, you can see, or SPX, this is S&P 500, there's a huge gap up. So their markets, when they're opening around this time, there was a huge upside with their markets open around 8 o'clock. So if you see around 8, there was a huge gap up of approximately 2% or 1.5%. This gap is because there is a positive sentiment for the inflation. That means inflation could have like less than expected, or even it's much better than previous month or etc. That's why there was a positive sentiment that happened. But we don't know whether this gap might get filled or might not get filled. But this gap that you noticed, right? That is why this SGX Nifty also this much of up momentum that we have seen. Otherwise, you generally don't see this much of a momentum in SGX Nifty very rare. Very often. If you even go and check yesterday's situation after market hour, this is the after market thing. Like wherever you are seeing the less volume, this is what after market thing. And almost there is no very major momentum that happened over here. Price closed somewhere over here, and at the opening also it is slightly higher. That is okay. That's a normal thing. And even before that also, if you see, so which was, this is during the market hours. After the market hours means, yeah, around this time, somewhere over here our markets closed around 3:15 like that. And there was a slight gap down opening that happened. This happened in the morning time. That means SGX market will be active till midnight 2:30. So if you see here, till 2:45, SGX Nifty will be active. That means our midnight 2:45. And then again, it will open in the morning around 6:30 in the morning. And again, it will continue till like our markets open, it will continue. The only break will be in the midnight 2:45 to 6:30. That will be the break for the SGX Nifty. So that will tell us where our markets are going, especially the Nifty, whether our Nifty is making a gap up opening or not. Using this index, you can find out. Imagine by tomorrow 9:15, if SGX Nifty is trading somewhere around here, then how can you find out how many points our Nifty will make a gap up opening means? First, you need to draw the level, which is wherever the market closed. This is 9 around this time, 9:25, yeah, this candle. So this is where our markets closed. From this place, if you draw the price range to this level, for example, let's say tomorrow morning also SGX Nifty is trading around this area. Then you see how much percentage of opening or how many points you see. Approximately close to 176 points, which means there is a possibility of our markets, that means Nifty especially, making a gap up opening somewhere close to 170 points. It can be 20 points plus or minus, it can be there, but somewhere close to 170 points, which means somewhere close to 1% gap up opening can be there. But after the gap up opening, immediately the price can come down, or it can be stabilized, or it can go upside. That's a different thing. But the gap up or a gap down, that you will be getting to know before itself using the SGX Nifty. So what happens, there can be multiple things. Just like today, there's a US inflation that obviously affects the US market. And if it affects the US market, it will also affect the Indian markets in the way of SGX Nifty. So that is the information that got out after the market hours. When that information got out, then definitely nobody can take the trades in our markets. What they can do, they can trade in those markets. Now what happens? If they are trading in SGX Nifty, how will our Nifty will go upside? Because our Nifty, if it has to go upside, there has to be buy orders and sell orders together. Buyers must be aggressive. Then only the price will go upside. If somebody else is trading in SGX Nifty, how will our markets make a gap up opening? That is because by looking at this SGX Nifty, thinking that price is like going upside, what happens? There can be multiple buy orders that can come by way of a pre-market orders or post-market orders. Post-market orders means once our market gets closed, you can still place your buy orders or sell orders that will get executed in the tomorrow morning whenever the market like about to open, pre-market when it happens, that's when it will get executed. But you can place as many number of orders you want. It might get executed if it touches your price, it might not get executed, but you can place the orders that will be there in your broker platforms. There can be millions of people who can place their orders and all orders will be in the pending mode in your broker platform. Like that, there is a time for pre-market orders also. Pre-market orders you can place between 9 o'clock to 9:08 in the morning. So between these 8 minutes, you can place pre-market orders also. And that won't get executed. The moment you place, it won't get executed. This all will be pending in the broker platform. And between 9:08 to 9:11, this is where all the pre-market orders and post-market orders that are placed one day before, all of them will be sent to the exchange, respective exchanges. It could be NSE or BSE. And between 9:11 to 9:15, this is where even if you see the Nifty value here, you will be seeing an updated value, new value you can see. Even if you look at 9:11 also, 9:11 in the morning, you will see the new value, updated value you can see, which could be like, let's say if the 1% that we're assuming, if it happens, then it could be somewhere 18,600 plus up 176 points upside like that. So you may see somewhere close to 18,770 or 760 like that. You may be able to see here at 9:11 itself, because that's when the orders will start getting executed. But the actual value, that 178 points actual value, you'll be able to see at 9:15, because this is what 9:11 to 9:15, within the 3 minutes, all the orders will get executed. As and when they are getting executed, the value will keep changing. So that's how, since we have so many buy orders and then some sell orders will be there. So whenever people are aggressively putting out buy orders, but some people are maybe to book the profit, they are putting out some sell orders. And when that order matches, the trade will get executed. Like that, within 3 minutes, if so many trades gets executed, what will happen? The price will make a gap up opening. That's how the price will make a gap up opening. That is the logic behind how the stock or the index will make a gap up opening. It's because of the inherent orders that are placed before the market opening. If imagine nobody placed any order, then there won't be any gap or a gap down, because nothing to execute. Nobody placed nothing. Wherever the market closed, that's where the market will open. So it's all because of the pending orders that were created before the market opening. That's how it will happen. And mostly index will be related to the US market sometimes. Most of the times, how the US market is performing, based upon that, our markets also might go up or go down, but not 100% related to the US markets. Sometimes some news might come out, which is related to the Indian markets only, but that news might come after 3:30. In that case also, depending upon that positive sentiment or negative sentiment, that will get affected with our markets. But that impact you can see in SGX Nifty, because our markets are closed. So that's how it can happen. And in case of a stocks, any specific stocks, if you see a gap up or a gap down opening, generally stocks will not have too many gap up or a gap down opening in a regular basis. But sometimes, depending upon it could be any result announcement, or it could be any product announcement, or some specific news related to the company. Because of all these factors, you have to go to daily time frame. Any stock also might make a gap up or a gap down opening, but it's not as much as index. Make a gap up or gap down on every day also, or out of 10 days, maybe 8 days or 7 days, it can make a gap up or a gap down. But stocks are not like that. Stocks might not generally make a huge gap up or a gap down opening on a regular basis. Whenever there is some specific situation that happens, then only it will make a gap up or gap down. In most of the cases, wherever the market closed, that's where it will open. Because, for example, let's say if Adani Enterprises is there, and Adani, today, whatever the information that you have, by tomorrow also, mostly, unless and until something major happens between tonight, nobody will be like interested to place too much of a buy orders or too much of a sell orders, because there is nothing specifically affecting that particular company. If, let's say, some big news came out after the market hours, which is affecting only that particular company, maybe then people might sell, like put a sell orders or a buy orders, etc. So that's why, like generally that thing will not generally happen. So that is why mostly you will see stocks will be generally wherever the stock closes, that's where it will open. But let's say the stock has result in their results or any other product announcements or anything particular news which came out after market hours. Depending upon the sentiment of that, people can put the orders, buy orders or sell orders. Then you can see the gap up or gap down opening in the stocks also, but not on a regular basis. So for example, this was a gap down opening. So from here, the market was set, it made a gap down opening. That could be because of any sentiment or anything. If you see what happened over here on this particular day, you can see the E, right? E means earnings. So on that particular day, company announced the earnings. Because of that, the price made a gap down opening. And since it was bad, already the stock is in a downtrend. And if you see the earnings over here, it will show the estimated versus reported. So estimated, like it was so much of estimation was there, but surprise in the sense, surprise means like you are estimating it to be 8.64 million or anything, but their earnings was only just 1.8 million, which means there was a 79% downfall than the expected, which is obviously a negative sentiment. So whenever the sentiment is very much negative like that, more than expected, in that case, which means there is some like there can be some sell off that can come because the sentiment is negative. People who are holding might even sell off. Not only that, you can also see some price action confirmation as well. This used to be a support. So this was a support for a long time. Here also price was taking support. The moment support gets broken because of this gap down opening, that support might turn into your resistance level. So that support is now acting as a resistance. So previously it opened a gap down and it could not come up because the earnings was too much low than expected. That's obviously a negative sentiment. People who are even holding the stocks might don't want to hold further. That's why there could be sell off that happening. But we know as per the price action, whenever a support gets broken, that might turn into a resistance level. So as per price action also, this is a key level. And even if it is not as per the support and resistance, just this gap down also, we need to mark it as a resistance level, because unfilled gap has to be marked as a support level. Unfilled gap down must be marked as a resistance level. What is unfilled gap down? Unfilled gap down means from where the market was there and from where it closed on the next day. So on this particular day, you know the gap between this candlestick body to this candlestick body. Then what you need to do? You need to mark a zone. So this zone you can use from this candlestick body to this candlestick body. You can mark a zone and then extend it further. Now what happens? This entire zone might act as a resistance because there was a huge selling pressure that got created around this area. And till the time this level is getting broken, till the time we can hold a sideways to bearish perspective. And this was a bearish perspective because of the reasoning also is important, especially when it comes to the stocks. The reasoning is most important, because why it made a gap up opening, why it made a gap down opening, like is there any inherent logic behind that? Because as I was saying, in stocks, the gap up or gap down is not a quite normal thing. But whenever that happens, try to find out what could be the reason behind that. So if the reasoning is still fine, then if it made a gap down opening because of this reason, there could be possibility that it might even go down further, provided any key support level is also getting broken. Or if it made a gap up opening and it broke any resistance because of some good sentiment in the market for that particular stock, then it can even go upside because of that sentiment till the time that gap up level is not getting broken, we can hold a sideways to bullish wave. So like that, this marking of gap levels is also important. Now, this is what is like as per price action, we need to find out where are the gaps and we need to mark such gaps. And if it's a gap up opening, you need to mark that, you need to consider that as a support zone. If it's a gap down opening, you need to consider that as a resistance zone. Now here it became again, it became like kind of supply area also, because supply area means what? Price can go upside and a sharp downfall can come. So on top side, we can also call this as a supply area. Plus on the bottom side, you can also call this as a demand area. Why we are calling it as a demand area? Yesterday, if you remember, we told that from a particular level, if price suddenly moves up heavily in one single direction with a big candles from the downside, that can be treated as a demand area. Now for this particular stock, definitely it is trading between a supply area and a demand area. These levels are very key levels, even from the higher time frame perspective. In 1 hour time frame, if you go, you might find some levels over here, some levels over here. That's the 1 hour time frame. But these are key levels from the daily time frame perspective. That's how you will generally do your analysis. So, and once that is done, there are different types of gaps. This gap we just discussed, which is, this is a continuation gap. Continuation gap means price can either be going down or price can either be going upside. And in between that, you will see a clear-cut gap. That's called as a continuation gap. Let's see how it looks like. So these are the different types of gaps. One is common gap, one is continuation gap, exhaustion, and breakaway gap. Now a common gap. So common gap means it keeps forming like 20 points upside or 20 points downside. It's a very common thing. Like you need not give much importance to that. For example, if you go to Nifty, sometimes you see the gap is there, but it is very, very minor. For example, from here to here, there is a gap. Or for example, let me show very minor gap. So here, if you see from this level to this level, there is a minor gap down that happened. But this minor gap down, especially if it is less than 30 points or in Nifty or less than 50 points in Bank Nifty, you need not worry about it. You need not mark any resistance level or a support level around that area, because that is very quite common, especially in index. And even in the stocks also, if you see very minor gap between the previous candle on the next day's candle, it is not that much important. So for example, if you see here, this is a daily time frame. So from here to here, there is a minor gap that is there. But it is not a major thing that you need to worry about and then mark this level as a support level. That you may even ignore it, because that can be quite normal also. Those gaps can be ignored if it is a minor thing. But some gaps you will see very clearly evident. So what are those kind of gaps which are continuation gaps? Why it is evident is because when the market keeps on going upside, you will not find any major gap, but suddenly here the market will open and it might continue further. That could be forming in an uptrend, or the market might be going down and suddenly you may see some gap down and then it can go down. So that also is a gap down. Just the example that we saw now for APL Limited. So this one, price was going down, but no major gap that you can notice. But here it was clearly evident that there is some kind of a gap that has formed. So this could be important. This can be considered as a continuation gap, but in the downside direction. So whenever you find continuation gap, try to see the reason behind that particular continuation gap. It could be mostly because of anything which is specific to the company, which could be earnings related, or which could be related to any events that they're announcing, or any new product launch, or any sector thing also. Sometimes what happens, metal sector, the like pharma sectors, these particular sectors will have some like particular news which will be like revealed by the government only, that is related to that particular sectors. Whenever that news comes out, maybe if it's a positively impacting that particular sector, you may see those stocks in that particular sectors might make a gap up opening also, because of that particular news which is impacting positively for that sector. So there could be some information that could be there. Otherwise, out of so many stocks, people will not just come to a particular stock and then place so many buy orders after the market hours. There could be some kind of a news that can be there. If you get to know about that particular news, that is even more beneficial, because if you remember, like we discussed, what are the factors that can affect the trend of the market? So this means why it is a continuation market, because it is either trending in upside direction or it is trending in the downside direction. So if you discuss, one point that we discussed was the sentiment related to that particular stock can also impact the trend. So if the trend is already upside, and again, if there is a positive sentiment in the market for that particular stock, there is even more chances that trend can continue further. But if it was just a gap up opening, but it is not backed up by a solid reasoning, then maybe you don't know, within few days, there could be high chances of gap filling that happens. What is meant by gap filling is, gap filling means whenever the gap happens, no? So like that, this is what you will mark. If any bull candle comes, that means like now it's a gap down you mark, which means a resistance. But to fill the resistance, there needs to be bull candle, which means the buyers has to come. If any bull candle comes and closes around this area, then it is called as a gap filling. That means bulls are trying to fill the gap so that they can break this level and then go upside. So here, whenever any bull candle comes and touches or closes, not the touching, that means you need to have a body in daily time frame that should be a bullish candle, which must close in this area. For example, imagine on a particular day, there's a bull candle which is looking like this in daily time frame. Then what you need to do, you need to change your gap from this level to this level. Because remember one thing, whenever you are marking the gaps, that should be only unfilled gap. Unfilled gap means inside that particular gap level, there should not be any body, especially the opposite color body, which means now it's a gap down, which means it's a resistance. That means opposite color is the green body, green candlestick body. That must not be there. So that's how, if it is there, then you will just change it. You will not remove the gap completely, but you will just put the new gap over here. Now this level might act as a resistance, because what is the inherent logic behind that? The buyers were able to come to this level, but they were not able to break this level. That means still this level can be considered as your resistance level. So that is the inherent logic behind how you need to adjust the gaps. So whenever any gap filling happens, you need to adjust that particular thing. Same like gap up also. For example, if you look at Bank Nifty, let's see any gap up level. Here the gap up is, here you can see. Now here on this 21st of October, this is where the candle is. Next day, this was the gap up that happened. Now at the end of 24th of October, you know that there is some gap that is there. Then what you do, from this body edge to this body edge, draw a level and then extend it further. That means now this entire gap level might act as a support level. But on the next day, what happened? Opposite color candle. That means now it was a gap up, which means a bullish pressure. Opposite color candle means the bearish pressure came and filled the half of the gap. Now what you do on that particular day, reduce this gap level to this place. Now this level can act as a support level. On the next day, you will extend it. After that, again, what happened? Again, half of the gap, which got filled by the opposite color candle. Now what you do, reduce this gap to this extent and then continue further. Treat this level as a support level. Now after some time, price came down, but it could not break this level. Now don't remove this support level, because you need not remove this support level, because this was a bullish candle only. If it was a bearish candle, imagine if it was a bearish candle, then you can reduce the gap. Imagine if this was completely bearish candle like this, then what you can do, from this level, you can remove and then put it this way. But since it's a bull candle, there is no need to worry about it, because gap up itself indicates that it is a bullish pressure and already the candle is a bullish candle. Now you need not worry. You can still continue to hold on to this support level. Till the time this level is not getting broken, you can hold a sideways to bullish perspective. So that is the thing about the gaps. Now you can extend it as long as you want. Whenever the price comes to this level, then only this level will be important. But as of now, if you are doing intraday trading or swing trading, and if the price is over here, then obviously this level might not be useful for you because it can take a long time. Maybe we even don't know whether the price will again come back to this level or not. Just in case, let's say even after 1 year also, if it comes back to this level, then maybe we'll be using this particular thing because it is still the unfilled gap. But now don't confuse yourself by marking the gaps at all these areas. It's not necessary. You can just find out what is the recent gap level. So to find out the recent gap level, you need to go to the current market price, whatever is there. And today itself is the recent gap level that we can notice. So what you can do from this level to this level, you can just mark it. That's it. So this is one of the recent gap levels that we can find. And if any bear candle comes and fills this gap, then you will remove it. Till that point of time, this level can act as a good support level from the positional point of view. So remember this word, I'm talking this will act as a support zone from the positional perspective. That means from a daily time frame perspective. But I'm not talking this as a support zone from the intraday perspective. So both are completely different, which means when I go to 5 minutes time frame, for example, I don't consider this entire gap level. For clear example, I'll do one thing. Imagine the gap is even bigger. That means the gap up is even bigger. Imagine this gap was this much, just for an example purpose. And then this is how many points, let's see how many points of a gap was this. Price range from this one to this one. Okay, there is approximately 200 points of a gap up is there. And intraday, for imagine tomorrow market open somewhere over here. And in the 5 minutes time frame, when I'm checking, price started to come down like this. Then I don't consider this entire gap level as a support area. Because in intraday, if you remember, yesterday when we were discussing the trend analysis, overall in daily time frame, it could be a bullish trend. But intraday can be completely different. Intraday can completely be bearish. That can be completely okay. So why I'm not considering this level as a support area or a support zone in intraday time frame is what can happen. Market can completely go in a reverse mode in intraday. And if you're finding a short entry opportunity here, you can simply go ahead and then take the trade, short trade. There is nothing to worry about it. You can simply go and take the short trade in intraday purpose. But till the time in daily time frame, so what can happen here? For example, price might go down like this. And in the afternoon session, maybe price can come up and open and close somewhere over here. A V-shaped market, if you find it, then in the daily time frame, how this candle will look like is, you may look a candle which looks like this, a long wick and a small upside body. This is how it might look at the end of the day in daily time frame. So now if you see this, there is no bearish candle which is closing in this area. That means what? I can still continue to hold this level as my support level for the upcoming days also, because that no bearish candle is coming and closing in daily time frame. So till the time when I'm saying this, you can consider this as a support zone, which means from the positional trading, especially from the daily time frame perspective. That means till the time any daily time frame candle is closing below this level, we can hold a bullish to sideways perspective. Price can even come here and then take support and then go upside, or it can trade around this area. Either it can be sideways or it can be bullish. But if any bearish candle in daily time frame is closing below this level, then we will hold, we'll remove that perspective, and then we might have sideways to bearish perspective. So like that, you can find out the recent gap levels and you can form a perspective like that. Yeah, and regarding this, like as I was mentioning, right, in intraday purpose, I'm not considering this level as a support level. Regarding the same point, we will be having a more discussion again when I'm discussing the intraday strategies. That is, we have a 12 strategies that we're going to discuss in intraday that will be covered on the day 4. So there I'll be covering out these concepts, because just based upon the gap up or gap downs, we have 6 strategies. So there also you need to understand what is the importance of a gap up and a gap down. So again, the same concepts will be covered over there. But now here what we are discussing is from the positional trading perspective, ideally, which means doing the support and resistances in daily time frame. So for that, this is what we use to mark the gap or gap up or a gap downs. This can be a continuation gap. This is one type of a gap. And the third type of a gap is exhaustion gap. Exhaustion gap occurs at the end of a particular trend. That means exhaustion, the word itself says that it got exhausted. That means the trend got exhausted. Let's say if the price is going in upside direction, you might find a candle which made a gap up opening, but at the end of the day, it was looking like a doji candle. That means a less body and wicks is there on both the directions, which indirectly indicates that price wanted to go upside, but once the market opened, it is not having enough strength to form either a bullish candle. At the same time, the gap is still there. It's not that huge selling pressure came in and it became a bearish candle. It was also not like that. The gap is still valid. The unfilled gap is still there, but it looks something like a doji candle. What this can indicate is, this can indicate exhaustion of a particular trend, and it could indicate a potential sideways momentum or a reversal momentum. But that one we don't know yet. Just based upon this candle, we can't say that now the price might reverse. It is basically saying that now it took a pause. From the continuation, it took some pause it took. After this, if you find any bear momentum candle or a bearish engulfing candle, that can indicate that there could be a potential down momentum that is about to come. But if you remember, we discussed something yesterday. To find out a potential reversal, you need to have 4 things. Like one is a trend line breakout, one is candlestick confirmation, and if it is forming at any key resistance level, that is even more valid, because at a resistance level, if you're finding a top wick or a bearish candle, that's even more probable that price might reverse. Plus, along with that, if it is breaking any swing low level, that also is one more confirmation. Swing low, maybe this level, that also is one more confirmation that trend might change. But those are additional confirmations. This could also be one confirmation, but this should be checked in daily time frame, not in 5 minutes or not in 1 hour time frame. This mostly happens at the end of the trend. It could be happen in the downtrend as well, in the uptrend as well. Don't focus upon the color of the candle. It could be any color. Most focus is it should look like something like doji and the gap should be there. And if that happens at a key resistance level or a supply level, which can indicate a potential reversal, and if any exhaustion gap that you can find in demand level or a support level, that can indicate a potential upside reversal. But to confirm that, you need to observe for some more time. Just because of that candle, you can't take a decision. You need to see the price action, what is happening around that area after the exhaustion gap. You may even track that or add into your watch list and then see how it is going. This is third type of gap. And fourth type of a gap is breakaway gap. As the name says, breakaway gap means it is breaking something. It could be a resistance level or it could be a support level, but it is breaking a certain level. For example, let's say a stock is there which is trying to break a particular level. It tried multiple times, but it could not break it. But on one particular day, price was, let's say price is trading somewhere over here. Previous day, it was closed around here. Next day, the market opened here. That means that particular stock opened here. And maybe this type of a candle, which means that gap, whatever is there, that gap itself broke the key level, key resistance level. So since it is breaking that particular gap, it's called as a breakaway gap. So these are the 4 types of gaps that we can notice. For example, like this. Here, if you see this is in daily time frame, all the examples that we are looking at is in daily time frame. So here there is a long wick like this, which is kind of a supply area because a V-shape reversal is also noticed in higher time frame. And here, if you notice, price reached over here with a small top wick, again one small bearish candle, and again a wick on top side. This also could not break the gap completely. But finally, the price made a huge gap up opening by breaking this level itself. So this kind of a gaps also can be an example of a breakaway gap. This looks like similar to your trend continuation gaps, that means continuation gaps, but the slightly small changes like that can happen in case of a trending market, but this can happen in case of a sideways market also. Maybe price was in sideways, but suddenly it made a gap up opening. That generally happens like after so much of consolidation, maybe price is trying to break certain level suddenly. So whenever that happens, also there could be possibility that price can trend in that particular direction, provided there is some additional evidence to support why price made a gap up opening or a gap down opening. So now what happens, since it was a resistance level, now since price made a gap up opening, from this point, you can consider this level as a support level. Just like the fundamental like price action rules, you can now consider that level as a key support level. So that is what that we need to get it from this concept of a gap up and a gap downs. And this one I already mentioned, unfilled gaps can act as a good level of a support or resistance. And unfilled gap ups is unfilled gap downs can act as a good level of resistance. Unfilled gap upside can act as a support levels. And regarding the gaps, again, we will refer the gap thing from the intraday perspective on day 4. So this is the basic understanding of why the gaps can occur and what you need to do whenever the gap happens. So that was the video on the gap up and gap downs. Hope it was helpful for you. So if it was helpful, do give it a thumbs up and do subscribe. And also you can check it out the Instagram post that we made on the gaps, where we discussed how do you make use of the gaps for intraday swing and positional trading. Thank you for watching the video, and until next time, this is Arun signing off.